JBlog 2009, October 25th. Starting starting out the blog by looking at the Market Watch headlines for Sunday. GDP sends recovery signal. Fact. Like presented as a fact. And then it says, report due Thursday is expected to confirm that the worst U.S. recession in post-World War II era ended in the third quarter. It's expected. Here it sends a recovery signal. And there it is, expected. Great. Thanks. Thanks for letting us know. Today I'd like to look at another great example of technical non-confirmation. Boy, I can't speak today. Must be the weekend catching up with me here. And this happens in all of the mainline indexes. We have RSI back in, when is this? Back in June or August? In August, posting a high, then on a higher high on the price point there is a lower RSI, and in this last price point here the RSI didn't even make it above the 70 line. So even though this is a stronger price rally, it isn't as strong on the relative strength index. The other thing that I've noticed is OBVs. OBV, on balance volume, originally pioneered by Joe Granville. Very interesting character, by the way, well worth a read. Posts a higher high on the OBV side back in, and when is this? In September. But this latest one has been a lower high. So once again, this is a technical non-confirmation. If we look at the tricks, which is kind of a more readable MACD, again, downtrend. So even though the prices continue to rise, technicals are not rising along with the prices. VIX, of course, doesn't show any indication of any fear in the market. There's the VIX has dropped as far as 2010, so there's a high amount of complacency here. Option buyers and option sellers are not taking, they don't require any risk premiums, and they're not willing to pay for any risk premiums, which shows that fear is at an all-time low. Well, not an all-time low, but because before 2007 this actually traded as low as 10, in the tens anyways, low teens, but there is certainly no fear out there. SPY, the S&P 500, once again lower OBV. This is very interesting, because even though the RSI did show a lower high back here, the OBV still did show a higher high, but the OBV itself is now breaking down as well for another non-confirmation. Having said that, this market doesn't seem to pay much attention to the technicals as of late. As you can see on several charts, interestingly enough, several charts indicate that there is a lot of interference in the market. Here's oil chart. And the thing that I noticed here looking at it, you've got a head, a shoulder, a clear violation of the right shoulder, which should have ushered in selling. But at this point here, buying started this enormous up day over here. And what we're looking at here, I believe, is a short covering rally. A lot of bears got involved in here, said, oh, there's a break in the technicals, oil is going down. And somebody on the other side of the trade said, we're buying right now. Could be the Chinese. They might be on a mandate to buy anything below $65. They might just have something like that, where they say, oh, it's cheap. Okay, buy anything that drops below $65. Might be the PPE in the futures market. It's quite unclear who is doing the buying, but somebody is certainly establishing a floor in the market, and then is scaring them. the bears, pretty weak bears, I suppose, out of that picture. And I've seen this happen across markets, lots of markets. The copper market is another one that had a very nice rounded top here. It was giving every indication of going down. A lower high, a lower high, a lower high, a lower high. It falls until here and bang, straight up again to new highs. I saw the same thing happening in 2007, which is actually what took me out of my longs, out of my shorts in 2007, believe it or not, in October of 2007. That rise of Apple, where Apple had a clear indication that it was dropping, and suddenly it shot up to new highs. Totally confused me, and at the very worst moment, I had covered my shorts at that point, which was still a bone of contention with myself. US dollar is still continuing to go down. This is a weekly chart. Let's have a little peek, because everything really depends on the US dollar. If the US dollar turns around and starts going up, just because everyone is so bearish on it, if the US dollar turns around and goes up, which it could very well do, then that basically indicates fear in the market. You should see the VIX shoot up. You should see option premiums go up high, at which point it once again makes sense to be an option seller rather than an option buyer. But for the time being, there's still continuing weakness in the US dollar. I am still in the trade, a UUP. I've got some options on that. It might or might not be going somewhere. I'll have to see. I'll give it about a month or so, and then I'll have to reevaluate that position. Strike is $23, and the expiry is March on the ones that I own. And I'm hoping for a bounce here, just because, as I said, everyone is so bearish on the US dollar. Stochastics are very low, very oversold. I mean, this chart is very oversold. So else than that, not much happened. Of course, there was the big surprise on the Apple side last week, where Apple blew everyone out of the sky with this little bounce here. Again, I did not expect that, and I didn't really find earnings so amazing to justify that much of a run up, to tell you the truth. I mean, at the end of all of this, okay, it was good news, but I mean, let's face it, good news was already priced into this stock. So to see an almost $20 increase in a couple of days, just because they sold some iPhones and made some money, not quite justified. I thought it was rather business as usual. I mean, Apple is a fantastic company, no doubt about that, but I still think that at a PE ratio of what are they up to now, 32, it's expensive, especially at this point in the economy. It is simply very expensive for what it is. So, but it goes up. Agrium took a tumble on a downgrade of potash and Mosaic. Fertilizer sales generally down. Profits down a little bit on that, so Agrium was hit as well. I'm no longer in it. I'm trying to re-establish a position. That would be nice. Financials triple inverse is showing some positive moves here, so that's interesting. Goldman Sachs again looks like a possible head and shoulders here. Interesting. I continue to hold it short, kind of for a long-term thing. Again, OBVs are being penetrated. It looks bearish to me, so I'm going with the overall idea that sooner or later there will be a downturn, and I'd like to be ready for it. Anyways, that's all I have for today. Not too exciting, but it's business as usual. I prefer the shorts to the long. Hope you make lots of money. Good luck out there, and all the best.